Hello and welcome to your Lancaster Home TV. I'm Jeff Gagan, and today we're here at the offices of Coldwell Banker in Lancaster with Brian Zulli of Guardian Transfer. Brian, welcome.
Glad to be here.
We're going to talk today about untraditional transactions, things that people are doing out there. And you obviously have dealing with this a lot at your end of the things. So tell me a little bit about what's happening in the landscape right now with untraditional transactions.
With the change in the market, what we're seeing really is three things. Individuals looking to do private money mortgages, lease purchase agreements, and installment sales agreements. And the first one I mentioned, private money mortgages, we can knock that out right now.
That's seller financing, right?
Seller financing, seller take-back mortgages, that type of thing. We can knock that out of one of those non-traditional transactions because the government basically has made them non-existent. You can't do them unless you're a related family member for the most part.
Okay. So that means that if you were to go to settlement and you had seller financing, that it would just, you couldn't do it.
You couldn't do it unless you're somehow related to that other person.
Okay. So that kills one of them.
That kills one. So that leaves you basically with two options. That's the lease purchase and the installment sales agreements. Both of them are very viable options right now. Both of them come with some risk. And really, it depends on the circumstances, which one you utilize. And it also depends on how risk adverse or how much risk you're willing to take.
Yeah, I imagine there's lots of risk on all parties' sides when you go into a transaction like that.
Yes, you know, from the lease purchase standpoint, and I probably should explain. First of all, there's differences. Some people use those terms interchangeably.
Yeah.
But an installment sales agreement and a lease purchase agreement are two different animals. Lease purchase agreement basically is a situation where you have a lease agreement, and you have built into that lease agreement an option to purchase the property at some point in time, at the end of the lease or within notification.
So you're renting the house for a year, and you're making some kind of arrangement to buy at the end of that lease.
Correct. And typically in those circumstances, the amount is agreed upon up front, or there's some type of agreement on how that amount will be obtained at the end of that lease agreement.
Right.
So that's one. That's pretty standard. That's pretty straightforward. On the other side is an installment sales agreement. Installment sales agreement, basically, the person, the buyer, let's call them, is putting down a chunk of change. Whether it's $5,000, $25,000, $30,000, it's non-refundable, and they're buying and they obtain equity in the property. From that standpoint, they become complicated because, first of all, you need to know who you're, frankly, getting into bed with.
Right.
On both sides.
Right. Yeah, and there's interest issues too, right? Equitable interest starts showing up on the.
The equitable interest issues. Do you record the installment sales agreement? Do you not record the installment sales agreement? Comes into play, and we'll talk about that here in a few minutes. But when you get into one of these transactions, you definitely want to pull the credit of the other party. And if you're a buyer, and especially in an installment sales agreement situation, you definitely want to do a title search and perform a title search to see what's against that property.
Just like a regular transaction, really.
Just very similar, yes. Yes.
Well, as far as you lease purchases and you've got installment sales, they're different. The goal is sort of the same at the end of the process, that someone who has broken credit or they're in a situation where they just can't go out and get a mortgage. So they're trying to work a deal with a seller to get a house within a certain period of time, and this is just different ways of approaching that.
Absolutely.
In your opinion, do you think that lease purchases are easier for somebody to get started on if they're in that situation, or is an installment sale just, which one is more likely to happen, I guess?
In the end?
Yeah.
They're both very similar animals. The lease purchase, what you're dealing with is basically you have a lease agreement there and you're getting monthly payments.
And it seems like there's less risk involved in that because the seller can always cut bait and resell it later to somebody else.
That is correct. I mean, some of the circumstances where you run into problems are installment sales agreements. The buyer is actually being given an equitable interest in the property, and when you do that, the due on sale clause within the mortgage, if the seller has a mortgage against the property, frankly, is violated when that occurs. And so a mortgage company, a lender, can then call that mortgage and say you're in violation of that mortgage and go ahead and foreclose on that
If they
property.
find out about it. Right?
If they find out about it.
Okay. Well, this is good information. I mean, we could go on at length about this.
Absolutely.
So if someone wanted to reach out to you and they're in a situation maybe they can work something like this, how do they get a hold of you?
I can be reached at Zulli, Zulli, at cbsp.com.
All right. Well, thanks for your time. And you guys can always reach me at Jeff at your Lancaster home if you have any questions. I look forward to talking to you and have a great day.